I'm Anika Hijazi. I'm the co-founder of TechCon Global, but outside of TechCon, I'm a CFO and COO for a company called SalesLayer. We're in the product information management space, so primarily SaaS is the space that I work in, and usually come in post-Series B, around between B and C, and take companies through exit. So that's my background, but what we'll do is we actually have a great panel here. You will see a variety, just from a journey, an entrepreneur's journey perspective. We have early stage investors, we have A to B, then we have growth capital. So you'll see how the investors think and what things they look out. So you'll get a good perspective from that perspective. But with that, what we'll do is I'll have you guys introduce yourself, 30 seconds, tell us about your firm, your company, what do you invest in, what's your thesis, and what makes you special. So, Rajiv.
Yep, I'll go ahead. I'm Rajiv Madhavan. I started my career as an entrepreneur for about 20 years, and then the last 10 years have been a venture capitalist in the early stage space of things. I've put about $350 million into very, very early stage. We're typically the first check in, and generally write anywhere in the range of $500K to $5 million in the first round. I've written one into the $10 million in the first round, and actively pursue our companies. That's what we've been doing. So it's more highly concentrated positions with more investments rather than a lot of investments that are done. We've done everything from semi to the last 4 years. More and more into AI applications, and we'll talk about that later.
Hi, thanks for having me. Vince Shea with Cypress Growth Capital. I started the trend of moving from California to Texas about 15 years ago. Moved here in 2010. Born and raised there, spent my early career in management consulting, and then 16 plus years as an entrepreneur with 2 different industrial software companies that we sold to private equity. My second company, the lead investor, first investor, was Cypress Growth Capital, which I joined about 4 years ago. We invest in emerging growth and growth stage companies, generally between $3 million and $25 million in revenue. And because of our backgrounds as former entrepreneurs and operators, spend a substantial amount of time helping to support those companies in their growth journey.
Hi, Samir Kumar. I'm co-founder and general partner of Turing Capital. We're still a relatively new fund, so $330 million Fund 1, based in San Francisco. We are doing mostly Series A, Series B, so I would say mature A's, early B's, and occasionally for repeat founders from our prior track record, we also participate in seed financings with small checks. Our core area of investment is B2B software, which, as I'm sure if you're following along the news, is going through an existential transformation because of AI, so I'm sure we'll spend some time talking about that. But we like to focus on industry-specific, industry workflows, vertical AI, looking for entrepreneurs and founders who have deep domain expertise. Everyone talks about, do you have a data moat or proprietary data? Even the context of what that means is evolving as we go fully AI native. And so we're looking for people that have the ability to build context layers or do basically context engineering to gather all of that data and to be able to build intelligence that models can use to execute workflows correctly. We also have a concentrated portfolio approach. We're not doing the power law with a very large set of companies where we're indexing the market. So each deal is high conviction. For our core bets, we look for the order of 10% ownership, and we can write checks up to 20 million. We're mostly doing investments in North America, but we do have a few portfolio companies in Europe, in Australia, and a couple in India as well.
My name is Susan Akbarpour. I'm the managing partner of Can-Do Ventures. It's a Silicon Valley-based early stage fund. We have a very unique philosophy. We are doing a very thorough due diligence. Usually it takes 3 to 6 months before we decide to invest in a company. We don't charge management fees. And we have focus on B2B enterprise software. AI, we have been investing for the last 7 years, and Also, a little bit of semiconductor at the intersection of AI. You can see in our portfolio. Our check size is about $1 million. We are engaging at earliest stage. However, team, TAM, traction, that's a must, but we're not investing in product wannabes. So we really dig down to make sure that this product or this solution that has been offered to us is a real product. It has deep workflows, integrations, partnerships. So those are all important for us. We get to know all your customers. We talk to them, your previous investors, your team members. It's more than a simple pitch when we decide to invest. My own background, I've been a 5X founder, LP in many multi-billion dollars fund until I decide that I want a more transparent way of investing my money alongside with other investors. My background is from media, enterprise software, retail technologies. I'm sitting in the board of a few AI companies, public media, and others.
Thank you. Thank you for that. So now that we know all of our backgrounds, let's talk about the real issue. And the real issue in today's world is that the million-dollar question or the hardest problem is everybody's talking about AI, but not many people know what truly is transformation and how to really go about it. They do not know how to separate the AI hype from real value, and what that real value means for different people can be different, right? So yes, there's some buzzwords there. You look at demos that look really fantastic, but then nothing to ship. So from that perspective, I want to hear, how are you identifying that real value, tangible or not, or just to say that this is durable, the way you're looking at each of your portfolio companies or potential portfolio companies. So if, Rajiv, you want to take a look at, share your thoughts and then we'll go around.
I'll give two examples. One of my older companies which sort of got a boost from the AI and we had to pivot and go. It's actually in cooling. Liquid cooling is becoming a necessity in data center cooling. We had the thinnest, smallest fans, solid-state cooling device, the only solid-state cooling chip that exists, which chip cools other chips. It can do 8 to 10 watts in an inch by inch and a half, 1 millimeter thickness fan for air. About a year and a half ago, we realized that the data center is on fire. There are 30 devices coming up with this AirJet product in the next 1 year. Basically, everything from MacBook Pro kind of quality of designs running at thinner than MacBook Air. That's the value that this can provide. So there's 30 products that are coming out, but we quickly realized when the AI was on fire and data center was on fire, that if you could apply the same solid-state cooling techniques to liquid jet, we call the product liquid jet, liquid cooling basically, we could actually change liquid cooling as it stands. Well, we now have something which can do 4,000 watts versus 1,000 watts. We morphed the companies, half the team, and that has been on fire. We are striking like $2 billion 5-year deals with data centers, and this company should go IPO in the next 2 years, courtesy of AI. I don't want to say anything, but it's AI driving the data center. That's because the AirJet would have taken us 8 years, 5 years, etc. This is going to funnel us much faster than what we could otherwise achieve. On the other side of AI, on the software side, where we do a lot of investment, we've been more thematic about what we do because people have to have the knowledge of whatever they are doing differentiated such that you don't have the large language models putting a few things into the system and building what you've otherwise built. There's a lot of sales companies. There was a period of time where every week I get funneled by one sales support AI company coming in and saying, I'm doing this to improve yours. But there's like it's an army of people, what's your delta? And the delta is all gone because it's now there in Claude that you can download and build in no time. But one of the things we have been thematically very applied on is in services. So if you look at it, I was a customer of SAP in 2000 when I was running a public company, right? And I bought, $8 million of SAP when we were going out IPO and spent $12 million in consulting services. Accentures and the management companies took basically 12 million to implement something. And after implementation, if I go and ask my CFO some question, he would say, I got to call those implementation guys and get it implemented. It's the worst software philosophy that existed. There is a plethora of these things where service companies today make an arm and a leg with selling bodies into the customers. And this is not something that can be done by a cloud, etc., because it actually needs agent and actually needs a lot of context-specific information that is very custom to very application. So we funded companies. Last year was a company in this particular area called Tessera. And we tend to have our own, not just opinion, we have experience on this, so we sometimes find the teams to go and do this. So this is one of the companies which did that. The first software deal that you can strike in some of these areas are in the range of 20, 30 million, which I've never had software SaaS companies do before. They will get 2 million in the first year, 6, 4, 5 in the second year, etc. Whereas with this service as a service software model, the starting point is sometimes 20, 30 million, etc. So it is a very lucrative business. So we've been very thematic on things where there's a moat. I think and if any of you are interested in kicking Accentures and the consulting service businesses, I'm all ears. I do believe there's a phenomenal opportunity there in taking down the service industry as we stand. Obviously, the companies that will fail are people like Infosys, Wipros, IBM Consulting Services, etc. These are all relying on old software and the need for a huge amount of bodies. And we thematically are pursuing that as one of the areas. We have done 4 companies in various aspects of that.
I would probably put in 3 points here. One is, I would say it always starts with the right people running an AI firm, or any kind of firm, honestly. Probably 80% or more of our assessment of companies at the growth stage is on the leadership team, the founding team, the management team they have around them to build it. The jockey matters a lot more than the horse in the earlier, even mid stages here. Second, people talk about proprietary data all the time. A lot of publicly accessible data that you can access at scale, which is how everything started in the LLMs and things. But it doesn't have to just be proprietary data. It could be the intersection of proprietary data or data that's sort of publicly available. But if you can be uniquely good at intersecting A, B, and C, and all A, B, and C are public, you could have a expertise there that could also create a big differentiator as well. Just be able to combine different publicly available data sets. And the third thing I think is probably the hardest to see, but probably arguably the most important, is proprietary expertise. So a lot of the models now are built obviously on publicly available data that you could find in the library in the past, or find on the internet or Google or wherever. But what's not in those things is the expertise you gain after you've been in college, after you read the textbook, after you read everything you could read in Google. It's the instincts and the know-how and the workflow knowledge you have from working in an industry or working in a section for decades. If you can apply that kind of workflow knowledge, that type of instinct to how to make decisions and draw insights into your AI workflows, then you truly have a differentiator beyond just having proprietary data. And that's what we're looking for in our assessment of companies in general, is those 3 types of things.
Yeah, so just coming back to your question about how do you assess if it's cool demo versus something that's commercially viable and scalable. I think at this point, everyone has followed the journey of autonomous vehicles. And we were just talking that, hey, there are obviously Waymos on the street here in Austin, and they're starting to show up in Dallas. But let's rewind the clock. How many years ago was it that all VCs were just gushing with excitement about autonomy is going to completely disrupt transportation, it's imminent, and there was a ton of dollars flowing into the industry. But look at how long it's taken us for one of the leading providers to get into real-world commercial deployments, and still with a lot of guardrails and restrictions on where it will work and how well it will work. And so I think the lesson there is, with AI, it's about the long tail of corner case, real-world scenarios. That is the real litmus test, is if you are doing a cool demo, or is this something that's commercially viable at scale? And I think that problem at different orders of magnitude even shows up in enterprise software. If you're building AI native, or you're building with LLMs, or you're doing agents, where we like to evaluate founders is how real world tested is this in terms of not just synthetic benchmarks or academic benchmarks, but real world evals or evaluations on real customer deployments, on real world data. And we like to understand that even if it's not perfect right out of the gate, that you have a path to that ongoing evolution, that ongoing improvement, and recognizing that going from 95% to 99% is, a big effort, but then going from 99 to 99.9 is almost as big, if not larger. And depending on the industry that you're in, understanding that your customers have different levels of tolerance for how well things will work or not work. If you're in finance and you are an analyst that's using, whether you're using Claude or you're using some other AI tool, you don't have the luxury of saying, well, the data is about 85% accurate, so I can live with that. You probably need something that's 99.9% accurate if you are using that data to put out reports about public market equities and their future. We have a portfolio of companies, just to make this example real, companies based in San Diego, companies called Netrodyne. They are doing driver safety with AI dash cams. Number one customer is Amazon. So if you see an Amazon last mile or middle mile truck, it likely has a Netrodyne dash cam in the rear view mirror or in front of the rear view mirror. This company is collecting to the tune of 1 billion plus miles of driving road data every month. They have built a annotated, curated data set of over 20 billion miles across North America, Europe, India, and Japan. And that is not the kind of data that, unfortunately, or fortunately, you will be able to just go scrape the web for. This is physical world data that's been collected with customer agreement using AI-powered dash cams and computer vision at the edge, and that's being annotated and marked so that it can be consumed for machine learning. So the other lesson here is data does not equal data set. Just because you're generating a ton of data exhaust and you can claim we're a data company, what we're looking for is what are you actually doing with that data? Are you preparing that to build data sets, to do machine learning, R&D, or build models? Are you using that data to extract meaning and context that informs how well AI workflows and AI agents work? Versus you're just generating a lot of data and kind of the story stops there.
Yeah, we're looking at enterprise readiness. I call the last few years of these AI hype the VC Fashion Week. So we are seeing all these AI models are on the runway under the glamorous stage light of flashy demos. And they look good. All these generative AI high fashion prints look good. But when they're coming off the runway and when you check on the pockets that have big holes and the fabric that shrinks in the first wash and the real world of the enterprise reality, that's where you can see if this solution is something that you should invest on or not. So we wait a little bit. That's what we decide to do in Candu. We don't get really hyped up on these flashy demos because they are all there. We care about these deep workflows and we don't look at them in a clean room labs of Stanford, MIT. We want them to see that they have gone through this test of CIOs when they ask about SOC 2 or SOC 2 compliance or edge case liabilities or even data residency. If they can answer those questions, that's something that we call enterprise ready. And I feel that CIOs are done with being AI curious. Their mandate is really ROI and improving the bottom line. If they can't, in their pitch, they can't answer those kind of questions, I feel that they're still continuing being a runway model and not really made for the real world and messy reality of the enterprise.
No, that's fantastic. And I'll definitely come back and we'll talk more about the enterprise readiness piece of it because there'll be claims, but then what does it truly mean to be? And I'll come back to that, Susan. But Rajiv, going back to you you've in the past done many investments, deep ones, deep technology, And at that time, in some cases, you've said there's an idea and you even get people to work on it, right? So now having seen that, plus what you're seeing, from your perspective, where do you think, or more so than others, where you see that technical moat, right, that competitive advantage? Is it in those data sets, or the system infrastructures, or the embedded decisions, or owning the workflow, or a combination of both? Where are you seeing that landscape from your vantage point?
So the problem is this, right? The enterprise readiness of any software this has been the case. I mean, you just can't pick on AI. It has been the case forever. I mean, it may have taken a lot less in some other spaces, or a lot more in some other spaces. You have to accept the fact that in the short term, it's all going to be an outcome-based selling. Meaning, am I giving you a real value in my consulting services model versus a consulting service firm like Accenture at 400 million bidding? Can I do the same work at 20 million? Plus, you may hire somebody else for 40 million, but you're still using 60 million of contracting versus 400 million to move from SAP XYZ version, ECC version to S4. I mean, if I can do that, and I can have human in the loop, I'm not eliminating 100% of the human in the loop. I may be taking what takes 100 people and brought it down to 10. And the same thing has happened in autonomous car, just to give the idea. The first idea was Elon Musk talking about everything is ready to go. Now, it's taken way more people, hands on the steering wheel, years running in each of these test sites. Like in San Francisco, they've been running for now 10 years in basically running this and learning the process, right? So the same thing, and how do you monetize that for a startup? Because when you do early stage investment, you can monetize that in projects where it is a service kind of model and you're giving a value reduction of certain cost and other things. You may not get 100% automation. I mean, the same is true to a certain degree, but obviously the pace of development on software programmers being eliminated is very, very fast. Clearly, AI is able to do that. But right now, the value is for the super duper developer, the software programming tools that have come about with whether it's Cursor, Lovable, Claude, et cetera, they now become 100 times more efficient, 10 times, 100 times more efficient. And that's where the value is. And how do you actually extract value for that process? So it's all knowing a particular application, the context of that, and being able to differentiate on that. If your differentiation is thin, the biggest problem is all the LLM companies, super well-funded. I mean, funding is not a problem. They can go and raise any amount of money. They need to sell tokens at the end of the game. What do they do for tokens? They will extract these values of integration to various public data sources and provide different workflows. Because if somebody else is using that flow, more tokens are sold. So essentially, if your delta is only that in terms of your thinness of the moat, you're gone. The context and differentiation has to be substantially big that you can make a big difference associated with it, right? And that is where the challenge comes in, that making sure that the moat, the context of application knowledge you have, if it's an application space, it has to be substantially differentiated, that you're not going to get a few LLM vendors putting a few people to sell more tokens is going to hit you.
No, I think that's great insight, and I see that play out. We all do, actually, and I think there's certainly some, just out of curiosity, by the way, recently, and from people who've pitched to you, give us an example to the audience of a company that's come to you as a prospect where you saw that it looked very impressive from an AI perspective, but to your point, you instantly realize that the true value wasn't there. I just want to see so that people can understand what will come your way and how quickly, as an investor, you're able to differentiate.
So I'm going to take the first one. I mean, I had a founder, a young kid, 21-year-old PhD out of UC San Diego, the youngest kid. He doesn't want to work for Facebook. He was one of the architects of the first Llama model. He had, in his PhD work, has got all the check marks he needs on his hand to come in. And every week he'll come with something which is not very highly differentiated, and I have to tell him that, right? And we actually paired him eventually with an SAP expert, a Max Attention Team expert who was their SAP service expert. And the two of them went and created a company. I mean, this kid didn't know the word SAP when he started out, right? But today, he's cloaking 20 million deals, right? A year and a half later. And so the ability to morph and bring that in. So I have another one in support where I changed, it was lots of discussion. We put in, when we write like 50K, 25K, et cetera, personal checks, it's usually telling them, I like you, you've been a founder before with me, I'm giving you some money, but I don't think this is a big one because we're not writing the 500 to the 5 million that I give you as a range. So essentially, the challenge is to write that 25K and get them to change sometimes and work with that, right? We being an early stage investor, we do that. That ability to just put a little bit, work with them and morph them into something where there is enough of that moat. So we have seen a number of these support and sales oriented companies. We even had one where he had raised from angels 500K and he got 500K in 3 months and he felt, I'm on top of the world, right? I mean, essentially, but you have not found a market fit, actually speaking. I mean, you had the right context to get a support-based solution deployed. It took another 3 to 6 months before which pivoted into something else and became some other company.
So I'll give an example. It's about 18 months ago at this point. And so the one thing I will say is hindsight is always 20/20. So it's always great to say, great, we made the right call. But things could have gone slightly differently, and you're like, wow, we missed that opportunity. So the company was focused on extracting from unstructured data, all kinds of unstructured data, PDFs, documents, workbooks, and building structured data sets that would then go into different kinds of workflows. This is obviously pre-agentic, but post-ChatGPT. And at that time, if you looked at whether it was open source or whether it was OpenAI, models were doing an okay job of dealing with unstructured documents, but as the complexity of the documents increased with more like images or tables or scientific annotation, it definitely was not something that was like, hey, we can put this into commercial grade production. This is great as a proof of concept. This company was entirely focused on that task, had built a custom model, and was showing benchmarks that showed, look, we are far superior to what's available, whether it's an open source model or one of the frontier models or the frontier labs and what they do for extracting from unstructured data. Now, ultimately, we ended up now rightfully saying, while the frontier models are not good enough at this yet, you can just do kind of a connect the dots to see where they're headed. And the shelf value of something that this company is doing, maybe it's 2 years, and then it's going to come under heavy pressure. And obviously, they did go and raise. They got a term sheet and raised. We also said to ourselves, well, we wouldn't have paid that price, so we're okay with not doing it because it was too expensive. But ultimately, the takeaway here is, even if you are doing something where you're picking one problem and you're going deep and saying, we know how to do this problem really well, there's still the question of how horizontal is that problem versus is it truly a niche? Is it in a specific industry, and therefore the opportunity cost for a frontier model provider to say, we're going to go after that versus everything else that we can do, versus a horizontal problem with a large surface area. I think you have to ask yourself the question, is that really safe from frontier AI or the biggest AI models and the kinds of tasks that they do well at?
Awesome. You want to take it then?
Yeah, hopefully I don't offend anyone in the audience with this answer who's working on this problem, but last year we talked about 1,000 companies across the whole firm. And we looked through our database, we were doing a year-end review, and it looked like 25 or so were kind of in the AI space solving lead generation for different industries. A massive thing. Everyone needs sales in any company. The most important thing in a company is sales. So lead generation is a hot topic. Can I go source all this stuff? And we got pretty close with a few of them, of those 25. And to answer your question on what didn't pass diligence or whatever, at the end of the day, what we realized is that most of these founders and most of these companies didn't understand how the workflows work within the sales organization, how things get passed from top of the funnel to further down the funnel. And so even if your technology or AI is awesome and you find things that other people can't find, if it can't be integrated, it can't be actually used by the marketing, sales, whatever teams, it's not going to get bought, not going to get implemented.
Yeah, I'm going to switch over in the interest of time. Susan, you touched upon enterprise readiness, right? And that's where, because you said you take your time, you do the due diligence, it's not that quick, you really go deep in. Help the audience understand what does it mean, right, when a company is enterprise ready and not just claiming, right? It's not just still in a pilot phase. And then to kind of build on that, at what ARR level, it's not optional anymore. Like you have to be enterprise ready.
Right.
And so just kind of share your insight on
Sure.
that.
There's an expression here, all cattles and all hats and no cattle, right? I mean, in AI world, we call it AI, but no infrastructure. So your API, I'm sorry, API and no infrastructure. So they are, when you are bringing the API and offering it to the CIO, yeah, the question is what this API can do for you. But the real pain is how they can scale. I mean, how this solution can help them to scale whatever they're trying to do. So to me, APIs and creating a solution, not a product, offering it to the customer is like, you know, buying some ingredients for a recipe. Someone can make omelets with it, and a chef can make a great meal, and they can sell it for $200 per meal. So you really need to offer a whole solution. You mentioned that, Rajiv, that if your software, if your AI solution is something that an agency can run it and pay, the customer needs to pay twice of the price that they pay you for someone to use it, that's not really a solution. So you're talking about ARR. When the companies come to us and they talk and show like 15 successful pilots with a few enterprise customers, sometimes I feel that maybe that person has 15 cousins in these different companies, and that's how they got into those free pilots. Even the paid one-time pilots, they're not impressing us because almost every enterprise, multi-billion dollars corporation, they have these innovation budgets, not operational budgets, right? If that one-time pilot has been paid by those budgets, that's not something that impresses me. MOU is not a wedding proposal. It's basically just trying if you show up on time on the first date, you know. But when they're asking you tough questions, when the CIO, legal are asking you about the security risk, about compliance, and all of this, that's where they're measuring you for the wedding dress or wedding suit, right? So you really need to be mindful about what you're trying to offer to that customer, something that they need to build upon and spend time and resources, or something that is ready for them. A treadmill that they go up there and they lose 1,500 calories, or something that you need to wire them with all of this stuff and have a lab and costly propositions for them to make it in use.
So we do a radically opposite decision making because we start at the very early stage. I have to tell you, they are not enterprise ready. I know that when they come to me, they can be. They don't even have the idea sometimes, all morphed out. So we are sitting there and working with them on the idea, right? So there's no way they end up. Our job is to make sure that they're surrounded by the right people to be enterprise ready as we go through the journey of creating the technology, right? But as a result of that, we get the first 20-25% check for what we get.
It's a trade-off, right?
Pardon?
It's a trade-off at the end of the day.
It's a trade-off at the end of the day, and we have to make sure that these companies reach that stronghold, right? But it is true. I mean that a lot of old school software that exists today as a business practice are written in 1970s, 1980s, etc. Right? Finance software is a good one as an example. It doesn't change easily. And sometimes instead of trying to change the software, this is where the agentic world will help. Let the dog sleep where it sleeps today. Let it be inside SAP, let it be inside Salesforce, etc. Can you control it with agents and have the central agent have the knowledge base to do it, right? We're sitting on the precipice of new architectures of doing things, right? Which of it can it penetrate quickest? And you don't want to be in the POC purgatory loop that you go through, right? I mean, you could get hundreds of POCs and it doesn't mean anything. It's a question of what's the time it's taking you. And yeah, sure, the first engagements will take longer than the second one, third one, etc. But you have to have a path to a success as quickly as you can, and that's what determines how much we plow behind that first 500K or first 5 million check. It's very much dependent on that, right? I mean, so we may, by the time we are done, we may be at 15, 20 million into that company, but it's only if they achieve these milestones that needs to be achieved on the path, right?
No, I think that's a fair point, and I think all of us have been operators at some point, so we absolutely know the two sides. Samir, going back to you, you specifically are at the intersection of AI and software. A lot of your companies are going, vertical. You have, whether that's a system of record, which is, by the way, the key word for us in SaaS. You just can't be layering something on top of those. It has to be a system of record, or your workflows. Help us understand when you're assessing, and I know you talked about data sets, and not every company is going to have the level of data set like Nitrogen does, right? But at the same time, when you're looking at this as an opportunity, when and how are you determining if this infrastructure is really sticky and or they're just experimenting?
Yeah, so I think, to Rajiv's point, to your point, we are going, literally in the midst of a very big transformation on the nature of software. And if you think about whether it's SaaS or just enterprise software broadly, historically, the fundamental assumption was it's a tool for humans to perform tasks. Humans are doing the work. Software is an aid. It's helping you do the work. It's helping you gather the data. It's helping you make a decision. If you go to a world of agentic AI, AI is doing the work. And in many cases, maybe humans are in the loop. They're orchestrating. They're judging the work. But if you just play this out completely, you could move into a world of fully autonomous AI. We're seeing little inklings of that even today. But in fully autonomous AI, there is a question then, what is the role of the human? And so if you look at the software stack, you talked about systems of record, the base layer. This is the ground truth. This is the deterministic layer. This is your customer data. This is your transaction information, your POs. It's the core database in your CRM system, in your ERP system, SAP, Salesforce. And so right now, it's enterprises are not going to just rip that out and say, we're okay with non-deterministic probabilistic software replacing this ground truth layer. And so what we're looking for is actually what is happening in the two layers above it. The system of engagement, which is where you typically would have a human using a tool, or you now have agentic AI accessing APIs, or agents and humans collaborating. And then the top layer, which is the system of intelligence, and to Rajiv's point, it was siloed. It was within an application. You'd build some UI, you'd build some dashboards, you were maybe giving a snapshot of the health of the business, but a true system of intelligence in a world of LLMs spans multiple applications, spans multiple systems of records, where the engagement UI is dynamically generated at very little marginal cost, and it's workflow specific. So if you're a software company or a software startup, well, where do you hang your hat? And so back to my point, which is if you have the system of record because of regulatory compliance or it's just so much gravity, that gives you some reassurance. But it's those other two layers. What are you doing to defend or to capture more of the value there? And increasingly, where we see the battle being fought, it's context. Are you in the loop when context is being generated based on how people are interacting with software or how software is serving customers? Are you using that context over time? Is that context turning into a context graph? Is there a flywheel there? And you're able to then be resilient because AI will need that context graph, whether it's fully agentic, or it's a co-pilot, or it's with human in the loop. If you can deliver the right context at the right time, the AI is more likely to do the job correctly versus requiring corrections or error handling. So I think moving forward, that's where we're going to be focused is what are your credentials and your strategy around collecting context, building context layers, and then being able to serve that to AI to be able to complete jobs.
Awesome, thank you. I know we're short on time, in fact, almost done, but Vince, I definitely want to get your perspective on one thing. You're further down in this stage, right? Your growth capital. At that time, complexity goes up, cost goes up. in your experience, what are some common mistakes that founders are making or companies are making in terms of scaling that you see and you have experienced in your companies that they're making in terms of at that stage?
Yes, so earlier you asked about enterprise readiness, and so at our stage, the companies are definitely enterprise ready. Usually have multiple, if not numerous enterprise clients and security compliance, all that stuff. But many mistakes, I would say. Still, others we wouldn't have a role in helping to support them on their growth journey. But probably the top three, I would say, are lack of prioritization, and I mean like ruthless prioritization, not just top 10, top 5, but here's the top 3 things I'm going to do exceptionally well, or top 1 thing even, and not try to be mediocre at a bunch of things, but truly good at a few things before you start to get too far ahead of yourselves, even at the enterprise level. The other part I would say is that a lot of times they don't get the unit economics right yet. And that might be okay at the very beginning when you're trying to acquire customers or develop an MVP or figure things out. But if you're at the scale we're talking about here, you need to have your unit economics, customer acquisition costs, your gross margins, all that stuff figured out, properly measured and calibrated, and have a plan to scale that. At the end of the day, a business exists to make money in the medium and long term, if not in the short term. So you need to be able to have those levers in place to do so. And the third and kind of final thing I would say is that even at that scale, sometimes they lose focus on sales. Sales still is the most important thing, whether you're at the startup phase or even if you're IBM or whatever, you still need to sell stuff, at least you don't have a company. And we want to make sure that we keep that sales centricity at the top of all the discussions.
Awesome. So in closing, one quick question. If an entrepreneur is coming to you, pitching, what's the one thing they should not be saying that lowers your confidence instantly? Just go one by one, and then we'll call it.
So, I think a lot of founders tend to believe that, the domain specific, this is because we are saying context knowledge makes a lot of difference, right? So many of them are taking what is being written on the web and regurgitating. Even things that I have said, okay, I don't want you to tell me that I said that, right? And this to me is annoying as hell can be, because first of all, I wrote it for some blog in some things, or I gave a quote somewhere. Doesn't mean that that's the thing in its isolation. When somebody starts quoting that, it really goes downhill in my view.
Vince, what about you?
I think too many pitch decks or conversations start with sort of the what they do and the how they do it, the what and the how versus like, who they're selling to, who they are, and why. Why are they doing it? Keep the focus there.
Yeah, I will say I think the one red flag, and you see it many times, you see competitive analysis, competitive charts, where the company's either in the top right or it's all green for them, and others have either red, yellow, and green. I'm like, okay.
Yeah,
That's a good one.
that was actually the risk that I always look into. They're comparing themselves with Microsoft and Google, and they have all the checkboxes checked, and those guys have a lot of hollows. But for me, when they talk about magic, to me it's untraceable security risk. Why can't you just explain what that magic is?
That's a good one. Anyway, thank you so much, gentlemen. It was a pleasure. I know all of you have either flown in or driven in. We have somebody from Dallas here and the other all from Bay Area, right? So thank you for joining us here in Austin. I hope you enjoy the panel, and thank you once again.